Hello everyone, welcome to Just Invest Today. And today we're going to be talking about Bill Ackman, and he thinks there's going to be a huge recovery into 2021 Q2, Q3, and Q4. And why I'm doing this right now is because we're almost at Q1, and then he expected a big Q2 recovery. And I want to go down the list of reasons why he feels like this, because this is going to be important for us as investors just to get an idea and kind of wrap our heads and wrap our minds around the idea that this could be a big 2021 or this could be a very bad 2021. It just all depends because I can see both sides of the coin, and we have to kind of get down to the bottom of this. We should find out what will be going on and kind of adjust, not really adjust your investment strategy, but just be aware and be kind of cognizant of what's going on around you, because I feel like that's important. Even though we don't look to the economy to make investment decisions, we still got to be aware of different scenarios and different plans and how things can turn out in the future. So let's get into this video. We're going to be talking about what Bill Ackman thinks. Billionaire Bill Ackman, hedge fund, he has like around $13 billion under management. So he's a good guy to look to and someone who you can take his advice and actually see what the potential is. So let's get into this video. But before we get into this video, guys, can you please like it? Can you please subscribe to this channel? I'm going to be giving you guys a lot of content. So get into this video. We're going to find out what Bill Ackman is talking about. So one of the first reasons that Bill Ackman gives why he expects this huge recovery is because he feels like the interest rates are still going to continue to be very low going in. And then he also mentions that how Biden is not going to raise personal income tax or corporate income tax, which I feel like is kind of opposite of what Biden was saying, that he wants to tax the people, like the rich people, and he's gonna want to tax the corporate because they're hoarding all the money. So I am not sure if he thinks that way still, because Biden has actually came out and said that he wants to tax the rich people and the corporations. So I'm not sure how that's going to turn out, but he also mentioned the low interest rate environment. And I think that's a very key thing, and I believe that because remember what the low interest rate environment does. It allows people to borrow money at low rates and actually invest that money if need be. Or it allows companies to actually come out of bankruptcy or come out of whatever they need and actually borrow money at low rates. They're not going to be paying as much, so it's more viable for them to just to borrow money and spend that money now, because when are interest rates going to be this low? You don't see environments like this a lot. So a lot of corporations, a lot of companies they're taking advantage of this, and even people can take advantage of this too. So that's what you're seeing. People are even like buying houses more because there's lower interest rates. So people are taking advantage of the low interest rates. So that's gonna actually help people invest in stocks, right? Because you got to think about it. Bonds are not a good option right now to invest in. There's a lot of places where the 10-year treasury is not a good way to put your money. A lot of people are not able to put their money into these investment vehicles. So what are they going to do? They're going to put their money in stocks to actually get a better return. So that's what he sees, and I understand that point, and I see what his thinking is, and I actually believe that could happen, and that could be one of the reasons why 2021 can be a very strong recovery. Another reason he gives, vaccinations. So he believes all the vaccinations are going to be very stable in Q2. People are going to be widely vaccinated, and this is going to allow people to actually be able to move around. And this is very key because people aren't able to move around right now. So that's reducing spending. People ain't going out to restaurants, to clubs, and all that type of stuff. So once that gets out, people are going to be spending a lot of money, and all these businesses are going to kind of get back to their feet. So that's what he sees. And you got to remember, a lot of people are able to save in this time because they're not spending as much money. So When this happens, he sees a lot of people just moving around, spending money at different places, traveling a lot, meeting with your friends, or you're going actually to meet up with corporations to talk about business again. And that's what he sees in 2021. And guys, that's all gonna affect the economy, boost the economy, put more money into these businesses. So he sees actually new highs for that, for those sectors, businesses that are going to be able to keep up with that inflation of just like people moving around, spending more money. So if you're a business to keep up with that, you're going to do very well. And guys, also businesses that are going to be are dominant, that have robust, they're strong balance sheets, they can adapt to the times with technology and all that type of stuff. They're going to be the ones that are going to last in this economy. He's saying that a lot of these small pop stores are actually got crumbled during the pandemic. A lot of bankruptcies. So all the dominant businesses are gonna rise to the top and actually be stronger because they don't have as many competitors, and people are able to use them a lot more because that's what they've been using. So now they're gonna be able to stick with it. So if you have a robust business that can adapt to these times, that's where you want to invest. So guys, look into your all your investments right now and see if these businesses are dominant, they're going to be able to last, they're not going to be disrupted by competition, they're going to be stronger coming out of this pandemic. Look at your businesses and see if this is the case, because if you have those type of businesses, you want to hold them for a long time because they're going to come out stronger with more cash, and they're going to be having less competitors to compete with them. So these are still going to be strong investments going into 2021. So if you have those type of businesses, you got to kind of cherish those businesses and be happy that you have them, be happy that you found them, because you want to keep those strong businesses in your portfolio. Also, a lot of these businesses are cutting costs, they're cutting corporate traveling, they're cutting a lot of unnecessary costs, unnecessary expenses. So this is all going to actually help earnings going into Q1, 2, 3. So this is what Bill Ackman sees in the future for a lot of these strong businesses. But guys, we got to look at the opposite view of this. How are we going to invert this problem? What is the worst thing that can happen in this environment right now? And that's what we got to see also. We can't just look at the one point of view and say that's it. We got to look at the opposite point of view. And the opposite point of view is that vaccinations, what if they don't get out in time? That can go on past Q2, past Q3. We don't know, right? Because we actually already seeing a lot of countries are complaining that they're not getting a lot of vaccinations, they're not getting enough, they're running out. So that could be a huge problem. So we might not even get that recovery in 2021. We might be still stagnated. What if there's more lockdowns happening? Remember, there's a new variant of this thing going around and it's been spreading and it's been found in different countries. You know how governments are, they're being very strict with this. So they're locking down, they don't care what's going on in the economy, they're just locking it down. They want to be as safe as possible. So there's still potential for more lockdowns, more regulations, more government interactions. And you know what, Biden has a strong government and he's going to be more hesitant to open up stuff. He wants to still clamp down and put maybe more federal regulations on that. So that's another opposite point of view you gotta have to look at. What if we see more companies talking about bankruptcy? What if more companies show that they're not able to compete in this environment? We don't know. This can all affect the economy. And what if there's more losses of jobs? A lot of places are actually not having their employers back, not having their employees back into the office. That's gonna hurt buildings and condos, and it's gonna hurt government offices, and that all generates money. So cutting out a lot of jobs, cutting out a lot of like hotels, all that type of stuff, they're gonna cut a lot of costs. So that could hurt potential jobs. So less jobs, less spending. So not as much money. That could be also a huge factor. And the number one thing is, how are people going to view 2021? Because we know in the short term, the market is, how the market is viewed is so key for the short term. If people are pessimistic about the future or pessimistic about the economy, you know stuff is just gonna shoot down. And that's a key factor. So, what is the government gonna say? What is the government gonna do to help this kind of make this people feel good, less anxiety, reduce anxiety? Because you know that's all been shooting up in the past um, months and year. So, is the economy gonna look more pessimistic, or we're gonna be more happy about what's gonna be coming in 2021? That all plays a huge role on the recovery, because if people and corporations and hedge funds are pessimistic about what's going to happen in the future, you're going to see stuff hit lows, all-time lows, a lot of crashes. So guys, keep that in mind. Tell me what you think. Are you with the Bill Ackman side, or are you with the other side of the coin? Tell me what you think in the comments. Like this video, send this to your friends, share it, and subscribe to this channel. Guys, I'm out. Peace.